all of the internet in the house is diluting, but I'm sure that all of you are familiar with internet connections and troubleshooting in the last couple of months. So I would share with you today, in a way, open discussion around tax and accounting. We are just in the opening of 2021 tax season, to summarize your 2020 tax and financial year. So I know that tax and accounting is sometimes, a different language. It feels like Chinese. The relationship with money create, some level of anxiety, uncertainty. It's a very intimate kind of forum today. Feel free, to challenge me with questions. If you feel free to ask specific scenario, raise your hand, and we'll address as much as we can, in a very simple language, tactics that actually can save you money for 2020. If you're in the right structure and if you follow some very basic guideline and try to move some of the noise and the bias that you've been either educated or hear for years from CPA or from the tax and accounting industry, we're trying basically today to break any of the existing rules and really present for you, areas that that by following, small steps, easy steps, can literally save you thousands of dollars in your pocket. And we also, again, will address expenses, we'll address, just personal tax questions. So we have an hour or 52 minutes. I'll run through my presentation, but again, feel free to, raise your hand. And if there's any specific questions, we have also Adi here. She's our marketing manager. She will help me to address some of your questions. I think that the one thing that I would love to hear before we start the discussion is if you can put in the chat, I'm really curious about your entity structure. If you're a sole proprietorship, just put C, Schedule C. If you're already an LLC, put an LLC. And if you're already the golden structure of S-CORP, just put S or $sign. I just want to see, how many of you, just in whatever structure. So just again, C for Schedule C, LLC for LLC, dollar for or S for S-CORP, and again, questions. This is kind of, the interactive discussion is what I care the most. So let me just share with you my screen and let me know if you can see my screen. So are we good? Can you see my screen? Perfect. All right, let me just make sure that I can also see all of you. So just a little bit kind of, I see just people continue to join. So I'll just make sure that I'm at the meeting, all of your friends as well. So again, just a little bit more about myself. Again, just some small background, so you'll know more about me. S corporation and LLCs, again, there's a lot of confusion about the LLC S corporation concept, so we'll try to break it into really easy areas that you can totally understand what it means for real estate agents, kind of S-Corp, how does our process information works, and then it's Q&A at the end, but again, feel free to raise your hand and we'll address any of the questions. So I've been in the industry for the last 15 years. I have a consulting practice in Totten Lake, in Kirkland, GPL Tax and Accounting, that does a lot of the traditional tax and accounting world. And as I continue to, I'm not a CPA, I'm a tax guru, I have master in taxation. And as I continue to progress in my professional life, I understand that, the tax system is really geared towards corporation. And if you're a corporation or if you're a W-2 employee, you're golden. There are solutions and there is an access to tax savings and benefits and affordable care and group health insurance. But when you're 1099, you kind of, left alone. There's no really playbook for 1099 self-employed, how to operate in this high level of complexity world with the IRS. So what I did in the last 3.5 years, I really developed like a playbook of how self-employed 1099 real estate agent, financial advisor, mortgage broker, freelance, can take his 1099 and really optimize his tax and accounting situation. We're saying that with an S corporation or with a tax structure that is efficient, you can both save tax and also save money. Save money and save tax, very different areas. Just because we can save you tax on the structure or how you run your business, but it also means that you don't need a lot of expenses to be really tax efficient. So we'll touch about expenses and write-offs and things that you can deduct from the business, but we just want to make sure that you understand that, you can both save tax without, expensing too much, which means you can actually keep a lot of this cash flow or disposable income, in your hands. So the idea is that, for many years, the IRS is providing self-employed great tools for tax savings, but there is some resistance, of the community to approach this very affordable and really beneficial tax rules or tax advantages. And there is some resistance because there's some fear of the system. But I want to make sure that you understand that the IRS is a big system, and the IRS allow tax planning. As tax court said many years ago in the United States, there are two tax system, one for the informed and one for the uninformed, which means if you get information and you act behalf, of a consulting or advice, and you can save money legally and you can approach, yourself as a real business, IRS, don't get offended, but you don't really care anyone. You're really small in the eyes of the IRS, and the IRS allow you to plan and use all of these amazing tools to get into tax efficiency. And one of those areas of tax efficiency is getting incorporated. Getting incorporated has a lot of benefits. Getting incorporated means take yourself from sole proprietorship, the Schedule C, and at least become, a single member LLC. Instead of Washington, it's really easy to incorporate and become a single member LLC. It's a register of about $200 with Secretary of State. It costs about $71 every year to renew the license. And the move from Schedule C to an LLC does not affect your tax, consequences, but it really affects, the enablement of what this LLC can do for you in the future. And again, and one of the things that we're telling real estate agents is, one, treat yourself as a real business. Be confident about yourself and your ability to provide. And this is why I believe many of us decide to be self-employed, because at the end of the day, we paint our own journey. We are responsible for our own destination and our own financial independency. And LLC, when we see that people basically incorporate an LLC, we see something about beyond, the level of protection. We see something about their ability to literally take themselves out of, their PJ and move into the working kind of outfit, and make sure that you treat yourself as a real business. So again, act as a real business, believe in yourself, believe in the industry that you're in, and LLC is one of those areas, that we see that, the credibility and building your own image and treat yourself as a real business, LLC is a huge contribution. Now, the third item we have, believe in yourself, believe in the business, and the third is believe in the system. There is a great system of tax mechanism, of tax saving mechanism that both state of Washington and the IRS is allowing real estate agent to take advantage of and use. This doesn't mean that you are taking advantage of the system or creating, an abusive tax structure. You actually take almost, what actually the IRS meant that it's the basic for you, to consume. And one of them is the ability to save tax via the mechanism of S-CORP. We're saying that LLC is not enough. LLC, it's a great structure to start. This is the basic that if you need to take one thing out of this today presentation is the fact that all of you that are still Schedule C must become an LLC tomorrow morning. There is nothing wrong about being an LLC even if you're not meeting, the numbers, the revenue that qualify you to be an S corporation. But we're saying that LLC is not enough because LLC from tax perspective is taxed the same as sole proprietorship. You're still exposed 100% to what we call self-employment taxes. And we'll introduce the self-employment taxes in a second. Self-employment taxes is a level of tax on top of your state and federal taxes. So we're all fortunate, that instead of Washington, there's no state tax, and B&O taxes, the business and occupation is usually treated by the brokerage. But from employment taxes, the LLC, you still consider to be both the employee and the employer of yourself. Therefore, there is an additional 15.3% of self-employment taxes. And we'll show in a couple of minutes just an example. What the S corporation is doing, The S corporation is bifurcating basically, the individual from the entity. So if I am Shahar doing sole proprietorship, commission real estate as a Berkshire, real estate agent, when I'm creating my own Inc., my Shahar Inc. become the entity that, collect the commission, and Shahar is become an employee of my own corporation. What it does, it basically eliminates the self-employment taxes exposure. So S corporation is not paying this 15.3% self-employment taxes. So think about, someone that is making, $100,000. Again, self-employment taxes can be sometimes $15,000, on top of your federal taxes. The last couple of years, the IRS changed the forms, the 1040 forms. But if you go to line 57, this is where you can find how much self-employment taxes you are paying every year. Don't freak out. These numbers can be huge. We see people that basically pay $15,000, $20,000 of self-employment taxes every year. Again, think about it. If we can eliminate it or save significant amount of, just do the math, how much, bleeding of unnecessary extra tax people that are not S-Corp are paying. Let me just open the chat. So I see a lot of Schedule Cs, S-Corps, Schedule Cs. I believe I'm both sole proprietorship, but also have an LLC. Again, this is a very valid question, and I'm super happy to see that there's like S-Corps on the call today. And if there is any specific questions for those that are already an S corporation, maybe comments about if they understand the tax savings, if they're using the S corporation for anything other than tax saving, happy to get some of your feedback. But super happy to see that people adopt the S corporation structure. So S corporation by default is a great tax entity structure, and then this is what we usually ask agent kind of to sit back and just reimagine. Close your eyes, reimagine. You trust your business, you trust yourself, you're doing a great job, bringing tons of commission through your household, and then reimagine what would you do with another $10,000 a year. This is how much S corporation election can help you to save. This is not just by saving on the self-employment taxes. This is with some other benefits like retirement and matching the right set of expenses into your corporation. But literally sit and imagine what would you do with an extra $10,000 that will not bleed constantly to the IRS. Those of you that have older kids, it can be an interesting college saving funds. Those that invest in real estate, a couple of years of $10,000 and down payment on a rental property. This is, on average sale, that can be just, another sale of real estate asset without moving from your chair. So this is real money that can, be saved in your pocket if you just behave, just a little bit more financially smart. So how does S corporation works? And we just want to go through one simple example, and this is for an agent that, let's say, is making about $100,000 every year. He has about $20,000 of expenses. Again, your staging, your coordinator, your businesses of home, your mileage, your continuous education, some marketing expense, and we'll again work on those expenses to make sure that they are reasonable, that are business expense, that are getting out of your business bank account, that you have documentation for that, like electronic records, bank accounts, things that we can show that your expenses. And then by the end of the year, you have about $80,000 of net income. This is the income that the IRS want to tax you. If you're a Schedule C, sole proprietor, or single member LLC, your self-employment taxes will be about $11,000 or a little bit more than $11,000. So assuming that you pay 20% tax or 15% tax on $80,000, 16, $10,000, whatever, about on your federal taxes, you will see that line 57 has an additional income of, additional tax of over $11,000. This is real money that the IRS will charge you being a sole prop single member LLC. When you move into the S corporation structure, S corporation is one of those entities that requires, the owner of the S corp to be an employee of himself and to take wages. And by taking wages, you take what we call reasonable wage. You take just portion of the net income and you tax yourself like an employee. And when you tax yourself like an employee of the business, this is where it triggers self-employment taxes. But it does not trigger self-employment taxes on the profit sharing, on the profit that you take out of the business. And the self-employment taxes on $32,000 of wage, it's only $4,800. While the $4,800 of self-employment taxes, or FICA, this is how it calls the name on the W-2. This is where you pay quarterlies. This is where you pay 941s. This is kind of where you hear all of these terms. This is all coming from the payroll world, but there is no self-employment taxes on the 48,000. So when there's no $48,000 of self-employment taxes, again, the net save is a little bit over $6,400. This is real safe. This is real methodology that the IRS allow you to bifurcate your net income from your Schedule C under the S-corporation regime into two different categories of income. One, ordinary income, payroll, W-2, subject to self-employment taxes, and one, profit sharing, which is your dividend. This is your distribution. This is your bonus for the hard work that you are doing as a real estate agent, but this is not your compensation. This is distribution or profit sharing, which is not subject to self-employment taxes. Questions? Either any of you S-Corp, people can share maybe a little bit more about, his salary expectations, his reasonable wage. How does he basically calculate reasonable wage?
Yeah, Shahar, hi, this is Brett. Can you guys hear me?
Yes.
Yeah, I don't have my makeup on, so I don't have my face up there this morning, but I've been an S-Corp for quite a while. It took me, I'll be pretty transparent, a number of years to wrap my head around how this all works. As far as the reasonable wage, if I'm correct, my accountant uses just the national average, basically, that a realtor makes, is that in a nutshell. So whether that's 32 or 36,000, it's lower than I think most of us would expect.
Mm-hmm.
And if you use that, then no red flags are going to come up because it's fair, right? It's as far as the IRS sees it, that's a fair, reasonable wage. And so in that nutshell, you're getting taxed, as simple as it is, only on that. And that's where the win comes in. I don't know if this is helpful, but
this is great. This is perfect. This is like exactly kind of on the point,
Yeah. So it's more, you'll get into this, I know. It's you got to pay your quarterlies. It's more work, but you save. The savings is incredible, and I think that's obviously a good thing. And the key for me was, and I wasn't very organized at the first few years, and I got behind on some 941s and didn't pay them, and I paid some penalties. But I don't want that to scare anybody. It's just, the key is just, most people are probably more organized than me, but stay organized, pay the quarterlies, and it's a win-win.
Yep. And
I have a question real quick. So it would not make sense then if you are not making enough to pay yourself that regular living wage.
So we believe that, the threshold to become an S-Corp is about $60,000 in net income. So if you're basically grossing up about 80, 90, 100, and you have about 20, $30,000 of expenses, and you're getting into this area of about 60, $70,000 of net income, the 15.3% will become significant, because on $60,000 of net income, 15.3% is about, $9,000-$10,000, and then 60% of it that we can save, it's still about $6,000 of tax savings. So the $60,000-$70,000, this is kind of the threshold. And going back to what Brett said, the IRS, if you just want to get a kind of rule of thumb, if you'll take 40% of your net income into wages, this is what the IRS consider to be reasonable compensation. Sometimes, again, it's lower than what you would consider yourself as an employee, but it's not a shame. You know, it's not something wrong. Say, hey, by the way, my wages is $40,000, and actually my bonus or my distribution are 60, 90, 100, and then actually I'm making about 140, 160. So the reasonable wage has two areas that we focus on. One, it serves you for, again, being compensated reasonably, so make sure that the IRS is happy. And second, is the enabler when you do wage now for other benefits. Again, 401k, FSA, HSA, which we'll touch, you know, in a second about the benefits. But Christina, just to go back to your question, again, about $60,000, $70,000, when you see that you're on a path, you know, to that route, we definitely believe that S corporation will benefit you. Now,
okay,
keep in
so
mind,
if you're, so for example, I'm in my first year, so I don't really know how much I'm going to make. So at what point would I say, oh, it looks like I'm going to make that much, I better, you know, get that going?
So you have your projections. So as a real estate agent, you know your pipeline. You know what's going on in your pipe. So you know,
yes,
in some percentage wise, you know what will convert to be a real deal, what will struggle, what will come in Q1, 2, 3. Once you continue to build the pipeline in Q3 and Q2 and 3, you know what's coming 3 and 4. So the most important is to get into the single member LLC, because if you get into the single member LLC, you know, if you incorporate an LLC and you act as Christina LLC, you know, as of 2021, and by any chance, you know, the stars align and commissions start falling from the sky and it's great year, you can always file this S-election retroactive at least 1 year back. Which means if you did a great year and you're a single member LLC and come November and you see, wow, I made 120,000 and my projection maybe for the fourth quarter is another 20, 30, boom, we can file S-election retroactively to beginning of the year or to beginning of when you start your LLC.
So how would that work for those living wages? Does that have to be on a regular, you know, continuous basis? So for example, if I do my first sale and then it's a few months, you know, I might not have the ability to pay a regular paycheck every single week. So what does that look like?
It's a great question. So it's a great question because now you know it's clicking into understanding the system. So again, you can go and pay the IRS once a quarter. So you can do Q1, and then if Q1 was not incorporated and there was no income there, you can file 0. And then going Q2, if the same, you can file 0. The IRS want to see reasonable wage on an annual basis. So as long as we push in Q4 of the 941 of your payroll, even on December 20th, a payroll that will be consistently reasonable for the year, you're good to go. Again, and then the following
so it doesn't
year,
have to be consistent weekly.
No.
Okay.
As an employee of your own business, you can pay yourself reasonable wage once a year. We prefer to do it at least once every quarter, so at least 941s will go not empty to the IRS.
Okay.
But since the income is fluctuate, it's super natural to have Q1 0, Q2 big, Q3 low, Q4. This is where we adjust everything to make sure that your W-2 captured all your income.
So that's how you would handle that fluctuating wages, is it's just by quarter. And ultimately by the year, really, the quarter is just kind of like little milestones, really.
Exactly.
Okay. Thank you.
And sure, you know, it's my pleasure.
So I got a question.
Great level of understanding. Appreciate kind of the question.
You had said that you can do this retroactive. So let's say I had a really good month in January, we could still set this up and go back, even though I've been paid out for that.
So if you're a single, so we spoke about two different concepts. One is the late S-election. You can file the S-election late, which means if you have not been an S-CORP in 2020, and you now have this discussion, and you're already a single member LLC, and in your specific situation, Mark, again, your net income is about 150,000. You know, if we'll file the S-election today, going back to whenever you incorporate your LLC, or as far as 1/1/2020, I can still save you $10,000, $15,000 on last year. And now going forward in 2021, you know, we'll take it monthly, quarterly, and make sure that you're compliant, you know. Okay. As for the discussion about the 941, if you miss the 941, again, by revenue, which means that there is no income, you can still file 941 0. The idea is that we don't want to file 941s late. If it's filed late and zero, there's no penalty because the IRS will charge you penalty on late to file on the amount that you owe them. You know, it's like an interest. So late selection, great tool still for 2020 to save tens of thousands of dollars. So we're filing late selection for people that are single member LLCs now for 2020. You'll see 15, 20, 25, $30,000 of tax savings because again, it's both eliminating the self-employment taxes, but also because 2020, it's a living year from retirement contribution, which means you can still do contribution to your retirement plan all the way to September 2021. For 2020, again, this combination of tax savings and the ability to defer compensation to your retirement plan can save a lot of money for those that had a really good year in 2020. So we spoke a couple of times about, you know, benefit, and this is just an example. You know, Stephanie came to us March of 2020, and she's a Windermere agent, and she was just about, you know, to file her TurboTax file, and she said, hey, one of my friends just said, Shahar, just review my taxes. And again, she was a single member LLC, had an amazing year, but filing, you know, as Schedule C, full exposure to self-employment taxes. We did the late S selection, and we saved Stephanie a little bit over $14,000, which means she had a refund of about $50,000. Again, overpaying to the IRS, $50,000 was sitting with the IRS as a huge refund. And again, her refund just increased by $14,000 to get $64,000. $64,000 was sitting in the IRS for almost a year. This is like a full college degree for one of her kids, you know, studying in British Columbia. So think about it. This is how much money people are bleeding into the IRS system. One of the areas that I like to take a second and just mention is this amazing benefit. So the S Corporation is not just for tax savings. It's also for 401k, HSA, FSA, group health insurance, and other fringe benefits. Think about all of those W-2 employees that are coming, you know, your way as customers, you know, or think about all of these W-2 employees for Google, Amazon, Microsoft, Facebook, that are maybe your friends. Everybody's bragging about their the competition on benefits. You know, my employer is providing me free lunch or free ride or 401k match or FSA or HSA, all of these swear words that sometimes you understand or not. So just by being aware into those benefits, you know that as an S corporation and your own corporation are eligible for all of those. And the benefit about it is Microsoft and Amazon has a non-discrimination rule because they have to match all of these compliance issues between, you know, their 50,000 employees. You are, as the employee of yourself, you can discriminate yourself. You can decide that you create a 401k with profit sharing, without, you can contribute to an HSA, you take high deductible health insurance, you take, you know, FSA to pay for kids' school. So again, knowing all of those benefits that the corporation can pay for things that you're already expensing, you know, this is not an additional, and just defer it into either retirement or saving funds can save a lot of money. So just to give you an example, as an S corporation owner that makes $80,000, you know, the same as the example that we did previously, if you put $20,000 into your employee 401k, you know, you save an additional $4,000 to $6,000, depends on your tax rate. If you have medical expenses out of pocket, you know, beyond your medical insurance premium, you can put an HSA account, a health savings account, up to $7,000, sometimes $8,000, that it's parked for you for any out-of-pocket medical expenses. And you don't need to use it now. It's not use it or lose it. This is an account that you accumulate for yourself, like any bank account, like an IRA, you know, that it's only for medical purposes. So if there's medical purposes between the kids or you and your spouse, you can run basically this debit card out of the HSA tax-free, again, and again, $7,000 at 20-30% tax, $1,400 to $2,100 in tax savings. FSA, flexible spending account, $2,500 for vision and dental, and $5,000 if you have kids under the age of 13 for any pre-after school activity or summer camps. So we know the times at the moment is not, you know, pre-after school activities and summer camps, you know, because of COVID. But in a traditional year, again, I have 3 kids, you know, $300-400 a week per kid for summer camp, 2 kids, $800 a week, you know, and boom, 4 or 5 weeks of summer camps, I'm completing my FSA deduction. If I run FSA $5,000 out of my business and don't pay tax on it because I'm using it for, you know, pre or after school child expenses, again, $5,000 in 20%, 30% tax, another $1,000, $1,500. So again, 401k, 20,000, HSA, 7,000, FSA, FSA for medical and HSA for childcare, dependent care benefit. Again, do the math. This is about 35, close to $40,000 of expenses, deductions that the business can run for us. In 30% tax, this is another $12,000 of tax mechanism savings that you can pay pre-tax instead of post-tax. So this is why, again, benefits out of S-CORP, such an amazing enabler. This is just a calculation that we run to show you, again, $6,400. This is the tax saving from just becoming S corporation. If you set the right benefit structure, HSA, FSA, this is an additional savings. And of course, again, health insurance. We are working on some group health insurance. We don't have yet news. It's super complicated area, but we hope that, you know, in the near future, Formation can also offer some reduction of group health insurance for real estate agents. So before we are moving into the next section, and I want questions, just some urban legend. IRS is a very weak entity. Unfortunately, between Obama and Trump, this was 2 presidents that didn't make the IRS position stronger. Between budget cuts and some tax reform, there is a lot of areas where people can save taxes, pretty legit. And the IRS, unfortunately, doesn't have at the moment, you know, the full power to go after auditing taxpayers. But regardless, S corporation, think about it, is just a mechanism to take your tax return and reduce the risk to get an audit even 10 times lower. Because when you bifurcate, you know, the S corporation with the individual, what the IRS is requiring you to do is to file a separate tax return for your business, the S-CORP, 1120S. And now the 1120S is going to the corporate system. And basically now your tax return compete on an audit with corporations that are making millions of dollars, while your 1040 is way less audited now because you move away from Schedule C, which is the highest and the most audited schedule in the IRS system. So even the move and the change to the IRS in the IRS eyes actually reduce dramatically the chances to get audited. So again, there is only beautiful things about S-CORP. Questions? So again, this is just to address Christina's question. We see that, you know, as you go through kind of the journey as a successful top agent, and you start making more money, S corporation is become more and more kind of in your favor. Again, as an accountant, I get this pushback for the last 15 years. You know, we try to present concept before for customer, you know, to adopt, and always there is a resistance. There is a resistance of change. There's a resistance to move from your traditional banking relationship to a new banking. The fact that now you need to adapt into a new system. As Brett said before, you know, it's a bit more complicated, you know, kind of, you know, the payroll every month or every quarter. You need clean financials, you know, P&L and balance sheet, so you can calculate your tax liability better. So there's a little bit kind of higher requirements to treat yourself as a real business. But again, if it costs too much, the tax savings, you know, think about it. If I can save you, you know, $10, $15, $20,000 every year, are you willing to pay me, you know, $3,500, $4,000, you know, to manage all of your financials? Both taking, you know, the stress from you and manage it for you and providing you, you know, the tax savings. So again, the money saves is higher, or the tax savings is higher than usually the cost. And if it's too complicated, just hand it to someone. Hand it to a bookkeeper, hand it to an accountant, hand it to someone that understands your industry and understand the needs of how to run a really compliant, you know, S corporation. There are solutions like formations, you know, we're a pretty holistic solution. We provide everything under one roof, but there are some other solutions that are great solutions, and we see people basically having a lot of fun with their S corporation without the need actually to manage it. And if there's other things to do, just think about again the tax saving. It's a one-time change, and the time is now, while you let your business continue to grow. And again, I think that Russ and I had the discussion earlier. It feels like there's a lot of new answers to the tax code. I can guarantee you that once you set this one-time S-corp for your business, as long as you'll continue to be a real estate agent, you don't need to touch this structure. It will be the same structure: business bank account, personal bank account, payroll, accounting. Everything will be kind of on a month-to-month, get into a very routine maintenance mode. So what is formations? So as I told you, earlier, I'm coming from the tax and accounting industry. I've been an insider for the last 15 years. I'm having the pain of accountants, but also as an entrepreneur, that grow a couple of businesses. I feel the underserved and the need of more out of the tax and accounting industry. And just think about the tax and accounting industry being the same. What was the most technology advanced invention in the last few years? I don't know, 20 years ago, TurboTax, when people could do taxes by themselves. Even QuickBooks or Xero or Gusto, all of these very great do-it-yourself software require from you guys to be an expert on those software, and there's no really a layer of integration between them all. And this is what Formations is doing. Formations basically is an integration. It's an orchestration layer above the incorporation need, above the accounting need, the bookkeeping need, the payroll need, and the tax filing needs. And we provide it, as an S corporation management in a box under one-stop shop. So when you come to Formations, we won't just save you taxes. We will save you taxes, but we also will take all of this stress from you, which means we will do the books, we will do the payroll, we will do the taxes, and we'll give you an access to an account manager, which can help you to get some insight about some tax strategy and be really proactive about ways to save tax. And I can share with you a couple of those methodologies.
So I can probably just schedule a time to talk with you directly. But like, for example, in my situation last year, so 2020, I got my license and had a lot of expenses for my business, but I didn't get my first paycheck until January of 2021. So for that 2020 year, would it be worth doing all of that, or just get it set up for this next year?
So probably going forward will be easier for you. So first we can chat regardless, because I'm curious to see your 2020 and just ways not to be too exposed kind of to overpayment of taxes. We also want to make sure that we're not killing, the tax return with expenses, just because, you self-employed are really depend on your self-employment income and your P&L for loans and rentals and things that you need to, continue to grow your own financial well-being. But if you see, Christina, a projection, a bright future for 2021, that you're going to, again, exceed the $50,000, $60,000, $70,000 in gross sales, in gross, not in net, I would incorporate 100% if you feel that this is kind of your future. And then somewhere around Q4, when you have a little bit more idea about what happened through the year and then what left, kind of 3 months, I would consider to do a late S selection for 2021 if you're going to hit those numbers. If you're not going to hit the numbers and the tax return is still in the 30, 40, 50, $1,000 tax rate, kind of net income, it makes sense to maybe to have the foundation of separate bank account, maybe an accounting software, but maybe S corporation would be just too soon. But again, who knows? 2021 should be a great real estate year. This is what.
Well, I would expect 2021 to be great. I just don't know if it's worth 2020 when all it was is expenses. Is it worth getting it all set up so that's all running on it? I've run other businesses, and I had a clothing store for many years, so I've been an LLC before. So I am familiar with it a little bit. I'm just trying to figure out what's the easiest thing to do for 2020, since there really isn't much on it other than some expenses for getting my license and that kind of stuff.
So I would keep it super simple under Schedule C with whatever income you had and all of those expenses, and just make it super simple. So
Yeah, because I didn't have any real estate income in 2020.
makes sense. So again,
Okay.
Totally.
Thank you.
No worries. So I put some questions for you just to kind of just to get a little bit kind of the vocabulary, or get kind of easier with the language. Again, S corporation is an election. It's not an entity. So you cannot go to the bank and open an S corporation bank account. You need an LLC, and then on the federal level we make this election. Form 2553. It's an election that you fax to the IRS or send them by mail, and good luck. Your mail will be one of those 8 million pieces that they didn't open yet. So there is a huge backlog. So just be patient. As I said, like think about it almost like a dysfunctional entity in the last 4 years, and then add into the top of that into this federal mess that going in the last few months between kind of governments and whatever, and then add on top of that COVID into the in on top of that, and just try to put yourself into the shoes of an IRS agent at the moment. It's just a real chaotic time for them at the moment, which again it's a good to take good advantage by taxpayers those days. So S corporation, again, an LLC, this is one area there is a lot of questions. It's not complicated to do the transition. We love S-CORP and not C-CORP. Again, C-CORP, it's a double tax entity. Reasonable compensation, again, the discussion we had, it's about 40% of your net income. Take money out of the corporation all the time. This is your money. This is what we call, distributions. If from some reason, again, the corporate bank account is falling short of funds, you can always put my personal funds. It's called owner contributions, into the bank account. I love paying family members. So if you guys have, kids older than 16, think about the concept of paying one of your kids for his social media help or some organizational kind of duties or some admin work. Think about a kid 17 years old getting $12,000 or $10,000 out of the parents' corporation. For the parents, again, if you're on a 30% tax, it's an expense, so you can save $3,000. The kid is not picking up this $10,000 in income because standard deduction is $12,000. So his income for him is tax-free. Now the kid has earned income, $10,000, and you can put $6,000 into his Roth IRA. Roth IRA means that this $6,000 into the kid's retirement account will never be taxed again. Never. If you're doing it in consistently, 3-4 years until he's graduating from college, this is over $1 million tax-free in his retirement, age of 69. So this is an amazing mechanism how to move business income into a personal account, take the deduction, and enjoy the retirement advantage that the IRS allow you to do with Roth IRA. If you do it with formations, for us, it's one click because we already connected into your business bank account. We already have all of the kids' information from the tax return. We just need the personal bank account for the kid or for you as the custodian. If you don't want the kids to have possession of the funds, it's totally fine. And then with one click, we move money from business account into, the Fidelity, Charles Schwab, E-Trade, Robinhood, whatever. Now, this is not joke, like the things that you hear on the news with all of these Robinhood accounts and all of these accounts that fighting at the moment Wall Street. Those kids are today 15, 16, 17 years old. When you give them money and they listen to all of this Reddit and all of these, social media and Clubhouse and whatever, they have so much knowledge and they're moving at the moment the market. So think about, again, there is some interesting case studies around allowing kids to get possession on funds early. It just, again, with parents control. It's just changing their financial behavior and make them really comfortable with money in such an early stage. This is a gift, by the way. We have tons of information on our website, formationscorp.com. We have blogs, we have YouTube channel. We are posting a lot of information on our social media, on our LinkedIn, Facebook accounts. Feel free to follow us and get tons of information. I really want to take it kind of the next 10 minutes and really try and answer some specific questions, you know, how old the kids need to be, employees, isn't 14, we're working for their parents. Again, it's when it makes sense, when it's reasonable. Usually 15, 16, 17, it's a years that will not raise any red flag. And it's about the age and how much money, you know, you compensate them. So to compensate a 15 years old kid with $50,000 of income for 2 months, probably a little bit too much, but to compensate a 15, 16 years old kid with, you know, $6,000 to $10,000 for a few months of a few days every week, helping, you know, parents' business, super reasonable.
Yeah, Shahar, I was just thinking about the state requirements and how easy it is to incorporate with the state of Washington. You can do it online. It's very, very simple. Yep. So don't let that be a concern. If somebody's, not that it'd be a concern, just it's very easy to do.
Yeah. And again, you can do it yourself in the state of Washington, sos.wa.gov. And there's a very easy way today to go and do like a domestic single member LLC. And then you just need to file the S election. Again, Formations is doing all of these incorporations for people. We create the entity, provide the article of incorporation, the EIN, which is the federal number. We connect you to your banking, into your accounting system. We define your reasonable wage with you, making a sessions of retirement to make sure that you are in the right retirement plan and in the right amount, helping you understand a little bit more your cash flow, just be a better business person.
Exactly.
Any questions on the individual level? Those of you that have rental properties, capital gains, any other PPP questions? All of you, I hope, file for the PPP one. If there is any reduction in income, more than 25%, it's quarter by quarter, which means you can have an amazing Q1 of 2020, a shitty Q2, and then it can be the opposite in 2021 or in 2019. So if there's a one quarter that you drop more than 25%, you're also qualified for PPP2. Take the money. If you won't take it, someone else will take it. If someone else will not take it, nobody will take it. The government will take it. So I hear some discussion about, yeah, I had a great year. I'm not sure if I want it. I'm not sure if I need it. Yes, you want it. Yes, you need it. It's a gift from the government. It's a grant. And if you'll behave the way that the government is expecting you to behave with PPPs, again, you can forgive or write off these loans to be a really gift. You know, you'll never need to pay it back. So PPP, pick, you know, your banking partner, file for the second one. There's another one called ERC, the Employee Retention Credit. If you're already an S-CORP, which means you are an employee of yourself and you took wages in 2021 or 2020, and you continue to take wages in 2020, and there is a reduction again of 20% of your income in some quarter, you can get another $5,000 gift from the IRS against your payroll taxes. So again, there is money everywhere. You should not shy away from those. Actually lean in, you know, be more involved with your financials, be curious to learn. Don't be shy from learning those new terms. And if there's any question, something is not clear, reach out to professional, reach out to your CPA, reach out to us, reach out, you know, to someone who can basically give you a clear understanding if you're eligible. If you're eligible, file and get the money. PPP today is funded, I think, in 72 hours, which means you can file the application with Seattle Bank or with Columbia on Thursday, and by Monday you get, you know, $25,000 into your bank account. So take advantage of all of those government programs. One note about expenses and write-offs. The move to an S corporation by nature save you a lot of money. Again, it save you this $10,000, $15,000, means that you should not be too aggressive on your expenses. On the other end, if you are expensing heavily on your business, one, there is benchmarking and ways to check other real estate agents to see how they operate. Sometimes you don't need 20,000 in marketing expenses to get the volume of business that you are getting at the moment. But if you are expensing so much, make sure that there is a good return of your investment. On the other hand, if you're not expensing much, again, just make sure that you take everything and you're not missing anything. And one of the tools to do it super smart is, one, run it from everything from a separate bank account. One. Second, connect some accounting system. We are working with Xero. There's also QuickBooks, and the cloud version, the online version is super secured and has an AI and machine learning. Once you connect it into the bank account and you put the right ruling, it can pick up a lot of the expenses. You don't need to sit and classify it. And again, you can also give it to someone to do it for you. But if there is 3 steps that those of you that haven't filed yet your 2020 taxes is, one, check if you're eligible for late S election, if you're already a single member LLC. If you're not a single member LLC, please become a single member LLC. And then please connect yourself into a separate business bank account. This is the one area that the IRS is kind of going deeper the most, is about commingling of funds. Commingling of funds can cost you with your S election, can cost you with your business expenses, can cost you with a lot of money and penalties. So separate banking. So again, if you are an LLC, think about late S election. If you're not LLC, become an LLC. Regardless, make sure that you have, separate bank accounts, and the most important, move on to the next era in 2020, 2021, and make sure that your bank accounts and your financials are connecting into an accounting software, so you're not doing any more your P&L and balance sheet by Excel or by, paper and pen, or paper and pencil.
Hey, Shahar.
Yes.
Do you think with the new administration, any of this may change in terms of, I don't know if that's a fair question or not, but.
So we believe that the status quo will stay, at least for this year. There won't be any retroactive changes. I know there was also a bill in the Washington State Senate about 9% increase of state taxes, excise tax on capital gains instead of Washington. So there is definitely an environment of really, 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 really lowest ever tax rate, both federally and state-wise, that may do for a change. I also encourage you all to Google Joe Biden S-CORP, and I think that you'll get the answer about Joe Biden philosophy about S-CORP. Joe Biden has an S-corporation for many years for all of his side income, for books and commissions or whatever, and we don't use it because he abused a little bit kind of the S corporation, and kind of the media is a little bit kind of on the negative, how S corporation is a tax efficiency entity. But it's just to give you an idea kind of also about his belief about small businesses and self-employed and side income. So I don't think that S corporation is going anywhere. We just see more and more incentives of S-CORP. For instance, one of the changes that happened recently, they allow foreign resident aliens, which mean people that are either visa or foreign investors to use S-CORP, which S-CORP until 2020 was only for US citizen green card holders.
Yeah, that's great. I just encourage everybody to move forward and do it. It's been huge for me.
Yeah, if you're in the right income structure, there's no downside to be an S-CORP. And I think that we are due for some tax changes, but I think that until we won't solve these COVID issues and see some economy recovery, I'm not sure that the government will put more force on tax. So
right. Okay. Thank you.
So Shahar, what is? I'm sorry, I had to look away for a minute. I might have missed this. What would be if I'm a Schedule C right now and I wanted to transfer and work with you guys and have you guys kind of run everything? What's the initial investment up front, and then what's the ongoing, I guess, if it's an annual or quarterly or? just going forward from that.
Thanks for the question, Mark. So if you are a Schedule C, which means you don't have the LLC, it's usually $500
Okay.
for one-time fee. And this
Okay.
is basically almost like a pass-through fee to incorporate and just handle all of the incorporation.
Okay.
And then going forward is $350 a month. So $350 a month basically will cover you for all of bookkeeping needs, all of your payroll needs, all of your tax business filing needs, quarterly 1120S, W2s, K1, everything that you need. Personal taxes will be charged separately if you want also to do the personal taxes with us. But the one-time $500 and $350 a month will cover you end to end for all of your financial needs, again, including our consulting time.
Okay.
All right, I'm done. You have my contact information. Russ can share with you if there's any other specific questions. Our office is located in Kirkland, in downtown Kirkland. So we're local here, Washington, but we actually do S-CORPs all around the nation. So if you want any advice specifically, if you want, something from us about taxes and about taxes, if it's something more intimate that you want one-on-one, just reach out. This is my passion, just to give information and educate self-employed and keep more money in your pocket. So appreciate the invitation and hope to see you soon whenever you want to reach out.
Thank you.
Thanks a lot. Thank you.
Great. Thanks so much, Shahar. A lot of great information you gave and a lot of great questions from all you agents too. So appreciate you agents being on here as well.
Thank you.
All right, I'm leaving you for Russ.
All
Thank you
right.
so much.
Thank you,
Appreciate it.
Shahar.
Thank you. It's very good.